Hello everyone, welcome to our sixth episode of Filter Coffee with Quantace. I'm Shubhada Patil. Today I will be sharing insights and interpretations based on the analysis by Karthik Junagadla and a team at Quantace Research. Today's episode unfolds across three pivotal segments that will deepen our understanding of current market dynamics, pay tribute to a legendary investor, and dissect the implications of recent market volatility. We find ourselves in a particularly challenging period in the markets, influenced heavily by ongoing political elections. We'll first revisit the NIFTY's crucial support levels and discuss the substantial influence of foreign institutional investors, whose strategies and whose recent activities have sparked notable market movements. Additionally, we'll celebrate the remarkable life and career of Jim Simmons, a titan in the field of finance whose innovative approach to investment has left a lasting legacy. Finally, we'll explore the current market volatility heightened by the Lok Sabha elections and what it means for investors looking at long-term investments. In the previous episodes, we at Quantace Research highlighted that the NIFTY support level stands crucially at 22,000 to 22,100. Today we see these levels being tested under current market conditions. Let's delve deeper into what the data reveals about the FIIs behavior and overall market movements. Starting this month, Quantace has observed FIIs demonstrated their optimism by rolling over long positions totaling 24,200 crores to the May expiry, indicating a bullish outlook. However, the sentiment was quickly tested on May 3rd when a report speculated on potential uniformity in capital gain taxes across investment instruments, leading to a rapid FIIs pullback of 8,200 crores. Further developments saw FIIs reducing their positions by an additional 1,000 crores, leaving net speculative longs at approximately 16,000 crores. This shift underscores the market sensitivity to news. Quantace analysis also shows that retail investors are heavily positioned in index options. The data suggests that the payoff retail is relatively better on the upside than the downside, that suggesting a significant potential for loss if the market declines. Given the Nifty's proximity to its critical support levels, this setup could lead to more dramatic market reactions if their levels are breached, especially if there is a swift downward movement of 300 points. Quantace's preference is mid-cap, small-cap, mid-cap over large caps. The sectors which Quantace believe will do well in current conditions are finance, that is non-banks, realty, mobility, consumer durables, and information technology. As we pivot from our analysis of the current market conditions, we take a moment to honor a towering figure in the world of quant finance, Jim Simmons, who recently passed away at the age of 86. Simmons was not just a brilliant mathematician, he was a revolutionary investor whose methods transformed the way we think about the markets. Jim Simmons was renowned for founding Renaissance Technologies and steering its Medallion Fund to achieve returns that are the stuff of a legend. With an average annual return of more than 60% over 3 decades, Simmons' strategies outperform market giants like Warren Buffett and George Soros. A former code breaker, Simmons pioneered the use of quantitative analysis and computational techniques in trading long before quant became a buzzword on Wall Street. His firm utilized sophisticated mathematical models and algorithms incorporating elements of artificial intelligence to predict market movement with astonishing accuracy. Jim Simmons also lived by principles that were as elegant as they were effective. He believed in the beauty of simplicity and efficiency, not in just mathematics, but in business operations as well. He advocated for surrounding oneself with talented individuals, giving them the freedom to innovate and excel. He encouraged original thinking, resilience, and yes, a bit of good fortune in the pursuit of investment success. The success of Renaissance over Simmons' leadership has made a profound impact, silencing many skeptics who doubted the potential of quantitative approaches in the market driven by human whims and emotions. His legacy continues to inspire new generations of quant startups like Quantace. We see the market not just as a battleground of egos, but as a complex array of patterns waiting to be decoded. Jim Simmons' approach teaches us that at the intersection of science and finance, there lies the potential for innovations that can redefine wealth management. As we remember Simmons today, we reflect on how his vision and principles can be applied to our own strategies and market outlooks. So, with the memory of Jim Simmons, groundbreaking his innovations and work in keeping it in mind, let's continue our explorations of the current market, particularly focusing on how recent volatilities reflect underlying political atmosphere. This brings us to our next segment on the increased market volatility and its implications for investors. As we move to the final segment of today's episode, let's discuss the current state of market volatility, particularly in the light of recent political developments. The VIX, often referred to as the market's fear gauge, has surged by approximately 50% in the last 10 days, a reflection of the uncertainties spurred by the ongoing Lok Sabha elections. And in such scenarios, the significant jump in the VIX to 18.5 signals the heightened anxiety among investors as they navigate through the election period. The spike in volatility is driven by the anticipation of election results, which investors fear could lead to substantial policy changes and impact the economy as a whole. Such spikes in volatility are not uncommon during major political events, as they often bring potential for both risk and reward. While the immediate reaction might be one of the concern, it's crucial for investors to view these fluctuations within the broader context of India's growth trajectory. The key for investors during such times is not to get swayed by short-term disturbances, but to maintain a focus on the long-term potential. India remains one of the major leading fastest growing large economies globally, and Quantace expects its long-term fundamentals are very strong despite temporary periods of uncertainty. Quantace recommends that investors should consider diversifying their investments to mitigate risk associated with such volatility. This might include adjusting asset allocations or increasing holdings in sectors less sensitive to political changes. Moreover, using this time to acquire high quality assets at lower prices could be a strategic move for those with a longer investment horizon. In conclusion, while the surge in market volatility can be disconcerting, it also presents opportunities for astute investors who look beyond the immediate turmoil. As the election concludes and the dust settles down, those who have prepared and positioned themselves and thoughtfully can potentially reap significant benefits. Thank you for joining us on today's episode of Filter Coffee with Quantace. We have navigated through the intricate market dynamics, paid tribute to one of the greatest in the investment world, and discussed strategies to handle market volatility. Remember, investing not just about reacting to changes, but anticipating them and planning accordingly. Please like, subscribe, and comment with your thoughts or questions. We appreciate your engagement and look forward to bringing you more such insights in our next episode. Stay informed, stay cautious, and as always, keep your investments smart. Until next time. Thank you so much.